In other news, the Reserve Bank has cut the official cash rate for the 6th time in a row. It's been trimmed by 25 basis points to 3.25%, the lowest rate in years. The Finance Minister took credit, saying the government eased inflation pressure by bringing public spending under control. But ANZ's chief economist pointed out that debt is still rising and the government hasn't addressed the economic ticking time bomb of ballooning superannuation costs. Here's political correspondent Zane Small.
The Minister for Regulation rinsing away the red tape.
It's just the idea of giving people a bit of trust.
David Seymour popped into Rodney Wayne this morning to announce sweeping cuts to regulations for hairdressers.
What the review by the Ministry for Regulation found is that most of the rules are either so silly they're ignored or so obvious they're being done anyway.
That includes mandates around the spacing of salon seats, the brightness of lights, and the ability to offer customers a refreshment.
We are taking a serious trim to the amount of pointless bureaucracy.
And he was hoping for a serious trim to the official cash rate.
If I thought getting my hair dyed with lower interest rates, I'd do it.
He didn't need to, because today's cut to the benchmark lending rate was widely expected. The Reserve Bank has lowered the OCR for the 6th time in a row to 3.25%, the lowest since 2022.
We now have inflation back in band, and that's partly because we've taken such a more responsible approach to spending.
How much did the government's, lower spending contribute to your decision today?
It had a very little role to play in terms of the decision we made today.
The budget revealed last week the government found savings of $5.3 billion per year, a subject the Prime Minister touched on today during a Q&A with ANZ Chief Executive Antonia Watson.
We've got a lot of things in motion and you've actually got to bend the curve and that's what we're doing.
Crown debt, it's still rising actually for quite a few more years. So again, this is not exactly all the weight on the wheel turning as hard as you can. This is actually quite a gradual adjustment.
ANZ's chief economist Sharon Zollner also highlighting an economic ticking time bomb the government has not addressed.
When the boomers were 20, starting their working careers, there were 7 working age people for every 1 retired person. Now there's 3.5, or a bit over 3.5, so half as many working people trying to support the boomers as they go into retirement. And it's going to keep getting worse.
They should have credibly tackled the ageing population problems, because that's why nothing they're doing is being taken that seriously.
We've obviously, as a national party, believe strongly that we should move the retirement age to 67. Every 10 years, Kiwis live another year and a bit. Obviously, that's something that politically we don't have consensus around.
New Zealand First is not keen, so the coalition government's washing its hands of that issue because only ACT and National are open to having the discussion.
OK, Zane, was there consensus on cutting the official cash rate today?
Interestingly, there wasn't. There are 6 on the committee and one of them wanted to keep the rate at 3.5%, so they had to put it to a vote. I asked the Reserve Bank Governor today why there wasn't that consensus, and he pointed to the fact that in April there was a slight uptick in inflation to 2.5%, though that was still within the Reserve Bank's target band. Now, despite the lack of consensus, the Reserve Bank is projecting another cut to the official cash rate. However, it's all looking a lot less certain. The Reserve Bank's statement today says a lot about uncertainty in the global environment, with references to Trump's tariffs and how that will ultimately affect the economy. The Finance Minister said today that she was struck by how much uncertainty the Reserve Bank painted in its outlook. On the other hand, the outlook for borrowers is looking a lot better, with ANZ and ASB, the latest banks, to announce cuts to some lending rates in the wake of the OCR decision.